Welcome to the first episode of Business Insights, a format designed to give investors an overview of public-listed companies. Today our hosts Envy and Fred talk about LyondellBasell Industries and give a detailed overview of the business model, the industry, as well as opportunities and risks. Let's jump into it.
Today we're going deep, really deep, into LyondellBasell Industries. Envy.
LyondellBasell.
Yeah, chemicals, plastics, that kind of thing.
Okay, got it.
Our listener wants the full picture. Their financials, their business, the good, the bad, and what might be on the horizon for them.
Sounds pretty comprehensive. What kind of intel are we working with?
Oh, it's a mixed bag, actually. We've got their latest 10K, the one from 2023. But to see how they've changed, we're also going back in time a bit with their 2015 10K.
Makes sense. Get a sense of the trajectory.
Exactly. And just to keep things interesting, we've also got a 10K from 2019.
Okay. What's so special about the 2019 one?
It's got an executive offer letter tucked away in there.
Oh, an offer letter? That's not something you see every day.
I know, right? It's super interesting. Gives us a glimpse into their corporate culture, compensation, all that good stuff. Plus, we've got their annual report from that same year, just to round things out.
Sounds like we've got a pretty good spread of information then.
All right, so first things first. What does LyondellBasell actually do? Paint a picture for our listener.
So basically, imagine a massive global company dealing in all sorts of chemicals.
Chemicals, huh?
Yeah, like the stuff that goes into plastics, packaging, even things like antifreeze. They're pretty big players in that world.
Wow, so they're kind of everywhere then.
In a way, yeah. Oh, and here's a little twist. They're actually phasing out their refining segment.
Really? Why would they ditch refining? It seems like, a pretty profitable area.
Yeah, there are a few reasons for that. For starters, they're really trying to align themselves with all the, sustainability goals that are becoming increasingly important these days.
Oh, okay.
Especially for chemical companies, And then there's their Houston refinery. It's in a location that could open up some interesting opportunities.
Opportunities?
Yeah, they might be able to repurpose it for, higher margin operations down the line.
Interesting. So it's not just about abandoning refining. It's more about strategically repositioning themselves.
Exactly.
All right, let's break this down a little bit. What are the main segments of their business?
They've got three core segments. First up is olefins and polyolefins. They call it O&P for short.
O&P.
That's the one focused on everyday plastics. Then there's intermediate chemicals, or I&D.
I&D, okay, got it.
They produce the chemical building blocks for a whole bunch of different products. And lastly, they have advanced polymer solutions, APS.
APS, all right, I'm following along. So these are the main players. But how's the company actually performing financially, I mean? Are they killing it or struggling?
Well, their 2023 revenue tells a bit of a mixed story. They're down to $41.1 billion. It was $50.4 billion in 2022.
Whoa, that's a pretty significant drop. What's driving that?
It seems like lower sales prices across the board, could be due to increased supply, maybe some softening demand. It's hard to say for sure.
That kind of decrease, though, has got to raise some eyebrows. Is this just a temporary blip, or is it a sign of something more serious?
It's definitely something to keep an eye on. It did impact their operating income, their net income, all that. They even had some asset impairments in 2023.
Asset impairments?
Yeah, those didn't help their bottom line either. But they did still declare and pay dividends, so that's something.
Yeah, that's always a good sign for investors. It suggests they're confident about the future, right?
Right.
All right, let's dig a little deeper into those segments. Which ones are doing well and which ones are facing some headwinds?
Okay, so their O&P Americas segment, they also saw a revenue decline. Kind of follows the overall trend.
Right.
But they did have higher sales volumes, which helped a bit. It kind of balanced out some of those price decreases.
So selling more, but at a lower price.
Yeah, basically. It'll be interesting to see how that plays out, in the long run.
For sure. What about the refining segment, the one they're phasing out? How did that perform in 2023?
Well, remember, it's on its way out. They're planning to shut it down completely by the end of Q1 2025. But even in 2023, it saw decreased revenue, mostly because of lower prices. But similar to O&P, they had higher sales volumes, which helped soften the blow a bit.
Sounds like they're squeezing everything they can out of it before it's gone.
Yeah, I guess you could say that.
Okay, let's switch gears for a minute and talk about risks. What are some of the challenges LyondellBasell faces? What should we and our listener, be aware of?
Well, given what they do, The whole chemicals and manufacturing thing, environmental health and safety risks are, pretty high on the list.
Makes sense.
They're working with potentially hazardous stuff, so things like pipeline leaks, explosions, fires, even natural disasters are all potential threats.
Those are serious concerns. Are they doing anything to address those risks?
Oh yeah, they're very much aware of these issues. They have this whole goal zero mindset where they aim for zero incidents, across the board.
Goal zero.
Yeah, and they even have an annual global safety day to really drive that point home.
That's good to hear. It sounds like they're taking safety seriously. But beyond those immediate risks, what are some of the longer-term challenges they might face?
Well, big capital projects, those are always tricky, especially with market volatility.
Can you imagine?
Delays or cost overruns can really eat into their profits.
Right.
They actually had that happen with their POTBA plant in Houston. It's a world-scale plant, but all those cost increases really affected their projected rate of return.
So even a giant like LyondellBasell isn't immune to those kinds of setbacks.
Nope.
When it comes to environmental. Oh, yeah, that's a big one.
Governments all over the world are cracking down, trying to address climate change, promote sustainability.
Can you give us an example of something that could really impact them?
Oh, yeah, the EU's chemicals strategy for sustainability. That's a big one. It could lead to stricter restrictions, maybe even bans on certain chemicals LyondellBasell uses.
So they need to be on their toes and adapt to all these changing regulations. What happens if they don't?
Well, it could be bad. They could face fines, lose market share, damage their reputation. They've set these big climate goals, so if they don't keep up, it could really hurt their credibility.
Right, makes sense.
Yeah.
You mentioned earlier something about their European operations, the EU carbon trading scheme, and some hedging strategies. Can you break that down for us? That sounds pretty interesting.
Okay, so they participate in this EU emissions trading scheme, which basically means they got to account for all their carbon emissions.
Like a carbon footprint thing?
Yeah, kind of. They get these carbon credits. If they pollute more than their allowance, they have to buy more credits from companies who have extra.
So there's an incentive for them to reduce their emissions, like putting a price tag on pollution.
Yeah, exactly. But those credits can get expensive. So to manage the risk, they use a hedging strategy.
Hedging.
It's like locking in a price for future credits, similar to, buying insurance to protect yourself from unexpected costs.
Oh, I see. It's like financial planning for their carbon footprint.
Pretty much.
So how's their track record been with this whole carbon trading scheme? Have they been managing it well?
Actually, during the second phase of the scheme, the one that ran from 2008 to 2012, they didn't have to spend anything extra.
Huh. Why not?
Well, the credit allocation was enough to cover their emissions.
So they had more than enough credits?
Yeah, probably because of the economic downturn back then. Emissions were lower. Plus, the EU might have been a little too generous with the credits initially.
Lucky break for them, I guess. But what about now?
The rules changed for the third phase, which started in 2013. They get fewer credits now, and more of their plants are included in the scheme.
Uh-oh.
Yeah, so now they're expecting to have to pay more for their emissions. But they're not just sitting back and taking it.
What are they doing?
They've got that hedging strategy we talked about, locking in those prices to protect themselves.
Smart move. Always good to be prepared. Now let's talk about their employees. We've seen their commitment to safety, but what about things like compensation and benefits? What can we glean from our sources?
Okay, so that executive offer letter from 2019, it's a gold mine, really. Did you know executives are actually required to own LyondellBasell shares?
What do you mean required?
It's part of their compensation package. They have to accumulate shares as a multiple of their base salary.
Oh, wow. So their pay is directly tied to the company's stock performance.
Exactly. It aligns their interests with the shareholders,
Makes sense. But what about benefits for everyone else, not just the executives?
They've got the usual stuff: medical, dental, vision, life insurance, disability, retirement, the whole package.
Sounds pretty standard.
Yeah.
Anything else stand out from that offer letter?
Oh, there was this one little detail. Their CFO, back in 2019, he came from Owens Corning.
Owens Corning.
Yeah, the building materials company.
Interesting. So maybe they value leaders with experience in different industries?
Could be. It's all about connecting the dots,
I love those little details.
Yeah.
All right, we've covered a lot, haven't we?
We have.
Let's just take a moment to, recap what we've learned so far.
Good idea. So we've got a good handle on their segments, their financials, and those risks.
Yeah, we've laid the groundwork.
But let's see if we can unearth some more, some deeper insights for our listener.
Okay, I'm ready. What else you got?
Let's talk about intellectual property.
Intellectual property, like what? Their logo?
No, this is bigger. Think patents, trade secrets. They've got this massive global portfolio covering their processes, the catalyst tech they use.
Ah, okay. So it's their, like, secret sauce.
Exactly. Their competitive edge. It's crucial for them to stay ahead, especially in such a competitive industry.
Right, of course. But isn't it, like, public knowledge? If they have patents, can't anyone just copy them?
Not exactly. They've got a whole system for protecting those secrets. Contracts, trade secret law, the whole nine yards. But sometimes it gets tricky.
How so?
In some countries, they have to, disclose some of their tech to regulators or potential partners.
Oh, wow. So they have to walk a fine line, protecting their secrets, but also following the rules.
Yeah, it's a balancing act for sure.
Now, there was this thing in their 2019 report, goodwill impairment. Can you explain what that is? It sounds kind of complicated.
Okay, so goodwill is basically let's say you're buying a used car.
A used car.
Right. It's in great shape, has a loyal following. You might be willing to pay a little extra for it.
All right.
Goodwill is that extra amount a company pays when they acquire another business. It represents the value of things like, brand reputation, customer relationships, that sort of thing.
So it's like the premium you pay for a good reputation.
Yeah, something like that. But then impairment happens when the value of that goodwill goes down.
Like if that used car turned out to have, hidden problems.
Exactly. And that's what happened with LyondellBasell. They had to take a goodwill impairment charge of $252 million, all because of some internal restructuring in 2023.
Wow, so it's like taking a write-down on that premium they paid during the acquisition.
Yeah, pretty much.
Okay, I'm starting to get it. Now, what about pensions? It seems like something people don't really talk about, but it's got to be a big deal, right?
It can be. Those pension obligations can really impact a company's financial future. Back in 2019, their projected benefit obligation for those pension plans, it was more than $1.2 billion over the fair value of their plan assets.
That's a big gap.
It is. They contributed $97 million to their pension plans that year, but it's not going to be enough.
So they've got a lot of catching up to do.
Yeah, they need to find that balance between, taking care of their employees' retirement and keeping the company financially stable.
Now, debt. They seem to have a pretty diverse debt portfolio. What's the story there?
Oh, yeah. It's a mix. In their 2019 report, they listed all these long-term loans and notes, bonds with maturities all over the place.
Maturities.
Yeah, like when they have to pay back the debt. Some are short-term, but some go all the way out to 2055.
2055. That's like forever.
Right. It seems like they're using that debt to, finance their operations, fuel their growth, and they're actively managing it.
Actively managing.
They mentioned they might repurchase some of their outstanding bonds.
Why would they do that?
Could be a way to, reduce their overall debt or take advantage of good market conditions.
Makes sense.
Yeah.
Now, I noticed something about guaranteed notes due in 2027. What are those?
Ah, those are interesting. They were issued by one of their subsidiaries, LYB Finance 2.
Subsidiary.
Yeah, like a separate company, but owned by LyondellBasell.
Okay.
So these notes, even though they technically belong to the subsidiary, LyondellBasell itself guarantees them.
So the parent company is ultimately on the hook.
Exactly. It's important to, look beyond the surface when you're dealing with subsidiaries and debt.
Right. Always good to remember that. What about leases? Those have got to factor in, right?
Oh, definitely. They lease all sorts of things: storage tanks, terminals, office space, even equipment. Back in 2019, their total lease obligations were almost $1.5 billion.
$1.5 billion. Wow. Why is it important to pay attention to those?
Because those obligations, they're like future payments, right? And those payments can affect the company's cash flow, their profitability. Some of their leases are for 30 years.
30 years?
Yeah.
That's a long time to be locked into something.
I know, right? Makes you wonder how they factor that into their long-term plans.
Okay, so leases check. What about investments? What are they doing in that area?
Okay, so they're not just playing the stock market. Their investments are much more strategic.
Strategic.
Yeah, they're looking for that sweet spot between risk and return, focusing on things that align with their overall goals.
Like what?
They invest in all sorts of things: corporate bonds, equity securities, real estate, even hedge funds and private equity.
Wow, they're not messing around.
Nope, they've got a diversified portfolio. They're managing risk, trying to generate returns. It's Pretty sophisticated.
Sounds like it. All right, let's talk taxes. I always find that interesting. What can you tell us about their tax situation?
Okay, so get this. Their headquarters are in the Netherlands.
Right.
But LyondellBasell Industries NV, the parent company, is actually tax resident in the UK.
Wait, what? How does that work?
It's all about corporate structure. They've set things up to, to optimize their tax liability.
So they're paying taxes in the UK even though they're headquartered elsewhere.
Exactly. They're subject to the UK corporate income tax system.
Interesting. I also saw something about uncertain tax positions. What's that all about?
Yeah, that's where things get a little fuzzy. It basically means there's some, disagreement or ambiguity with tax authorities about how certain things should be taxed.
That's like potential tax problems they're aware of.
Yeah, they're trying to manage those risks. They reported a balance of $238 million for those uncertain tax positions in 2019.
Something to keep an eye on for sure. Any other tax-related tidbits?
Oh, yeah. They mentioned benefiting from something called the patent box ruling in the UK.
Patent box ruling.
It's a tax break that encourages companies to, develop and commercialize patented inventions.
So they get a lower tax rate because they hold patents in the UK.
Yeah, pretty much. It's part of their global tax strategy.
Clever. Now let's circle back to their European operations and that EU emissions trading scheme. I remember you mentioned their 2015 report had some interesting details about that.
Oh, yeah, that's right. So we talked about their hedging, but it's actually interesting to see how it played out in reality. During the second phase of the scheme, they didn't have to pay anything extra.
Really? Why not? I thought they said the credits weren't enough.
Hey, yeah, but back then, it was different. They had enough allowances to cover their emissions.
So they were in the clear.
Yep. Probably a combination of things like the economic downturn, lower emissions, and maybe the EU over-allocated credits at the beginning.
So a bit of luck on their side. But then the third phase started in 2013, right?
Right. And that's when things changed. EU cut back on those free credits, and more of LyondellBasell's plants were included, so they knew they'd be facing extra costs.
And that's where their hedging strategy came in. They locked in those prices to protect themselves.
Exactly. And get this, they actually had a surplus of allowances from that second phase. They could use those to offset some of the costs in the third phase.
Wow. So they were actually prepared for the change? That's impressive.
Right. It shows they're thinking ahead, managing those regulatory risks.
Okay, so we've covered a lot. Intellectual property, goodwill, pensions, taxes, even carbon credits. It's all starting to connect, all these different pieces of the puzzle.
It is, isn't it? But we're not done yet. There are a few more details I think we should touch on.
Right. Lay it on me. What else have we got?
Let's talk about how they recognize revenue. Might sound kind of technical, but it's important.
Revenue recognition.
It's all about how they account for their sales when they report those sales in their financials.
Okay, so how do they do it?
They use a principle-based approach, meaning they recognize revenue when they've, met their end of the bargain with the customer.
The bargain, you mean like when they've delivered the goods?
Yeah, basically. Usually when the goods ship from their facilities.
So it's not just about making the product, it's about actually fulfilling the contract.
Exactly. And they're pretty transparent about it. They explain how they handle things like customer incentives, shipping costs, taxes. They want to show the whole picture.
Good. Transparency is always a good thing when it comes to financials. Now, what about inventory? I know they use this LIFO method, but I always get confused about that. Can you remind me?
Okay, so LIFO, it stands for last in, first out. Basically, it means they assume the last inventory they bought is the first they sell.
Okay. But why does that matter?
Well, it can impact their reported profits, especially if prices are going up. With LIFO, their cost of goods sold might look higher, so their profits could look lower.
Right. I remember now. It's all about those accounting choices.
Exactly. And speaking of costs, they gave a really interesting breakdown of their cost of sales.
Okay, break it down for me.
Feedstock and energy costs, those are the big ones. They usually make up like 75 to 80% of their total cost of sales.
Wow, that's a huge chunk. So if those prices go up, they're in trouble.
Yeah, pretty much. They're at the mercy of those commodity markets.
Makes sense. What about the rest of their costs?
Well, there's those variable costs, things like transportation, packaging. Those are about 10% of their total cost of sales every year.
Okay, and what about the rest?
The last bit is their fixed operating costs. Stuff like salaries, depreciation, maintenance. Those are less affected by how much they produce and usually make up about 10 to 15% of their cost of sales.
All right, so we've got a pretty clear picture of their cost structure now. Helpful to know what's driving their profitability.
Definitely. Now, let's rewind to 2015 for a minute and look at another aspect of their hedging activities.
Hedging again.
Yeah, but this time it's about commodity prices, not just those carbon credits. Remember, they buy and sell a lot of raw materials, and those prices can fluctuate wildly.
Right, so they need to protect themselves from those ups and downs. How do they do that?
They use a bunch of different financial tools, things like commodity swaps, options, even futures contracts.
Futures contracts. Sounds complicated.
It can be, but the basic idea is that it lets them lock in prices for those materials so they're not as vulnerable to market swings.
Ah, so it's like they're taking out insurance on those raw materials.
Yeah, kind of. They're mitigating their risk.
Smart. And they actually provided a lot of detail about these hedging activities in their 2015 report, right?
They did. They even broke down all their outstanding commodity derivative instruments. It's pretty impressive.
So they're not just dipping their toes into this hedging world, they're diving in head first.
Exactly. And they didn't stop there. They also mention using things like value at risk, stress testing, and scenario analysis.
Okay, now that sounds really complicated. What are those?
Those are like advanced risk management techniques. They help them figure out how much money they could potentially lose in different market situations.
So they're like running simulations, like what if oil prices crash or there's a global recession?
Yeah, exactly. They're trying to be prepared for anything. It's all about identifying those vulnerabilities and figuring out how to deal with them.
I'm starting to see a pattern here. They really seem to be on top of their risk management game.
They are, but risk management isn't the only thing they're good at. Let's shift gears and talk about their global reach.
Global reach. Sounds ambitious. What kind of challenges do they face operating in so many different countries?
Well, one of the things they highlighted was complying with anti-corruption laws, specifically the U.S. Foreign Corrupt Practices Act.
The FCPA, oh yeah, that one's a big deal. No bribing foreign officials.
Right. And it can get tricky for a company like LyondellBasell because they operate in over 100 countries.
I can imagine. Different countries, different cultures, different rules. Must be a nightmare to keep track of it all.
It is. They have to be super careful about, things like gift giving and hospitality. What might be considered normal in one country could be seen as bribery in another.
So how do they avoid accidentally breaking the law?
They've got a whole compliance program, training for employees, due diligence on their partners, a system for reporting and investigating anything suspicious.
So they're not just hoping for the best. They're actively trying to stay on the right side of the law.
Exactly.
Yeah.
They even have a code of business conduct that everyone has to follow no matter where they are in the world.
Sounds like they're taking it seriously. Good for them. But beyond just legal stuff, what about competition? They're a global company, so they must have rivals all over the place.
Oh, they do. And not all those rivals play by the same rules. Some are state-owned or get subsidies from their governments.
Ah, so it's not a level playing field.
Nope. It makes it tough for LyondellBasell to compete on price alone. They have to find other ways to stand out.
So what's their strategy? How do they stay ahead?
Innovation, for one. They're always trying to improve their products and processes.
Makes sense. Anything else?
Operational excellence. They're all about efficiency, reducing costs, and of course, they focus on building strong relationships with their customers.
So it's a multi-pronged approach. They're not putting all their eggs in one basket.
Exactly. And they're not afraid to make big moves like partnerships and acquisitions. That helps them expand their reach, get access to new technologies.
Speaking of big moves, you mentioned earlier that they're phasing out their refining business. Do you think that's part of a larger shift in their overall strategy?
It could be. It's definitely a major decision. Let's take a closer look at why they're doing it and what it might mean for their future.
Okay, I'm all ears. Why dish refining? It seems like a pretty core part of their business.
Well, we talked about sustainability before. Refining is a dirty business, literally. Lots of emissions, lots of pressure from regulators and the public to clean up their act. By getting out of refining, LyondellBasell is basically shrinking its environmental footprint.
Makes sense from a PR perspective, but refining is profitable, right? Why walk away from that?
It's all about the long game. They're probably looking at the trends, the shift to cleaner energy, the demand for sustainable products. Refining might not be such a hot business in the future.
So they're betting on other parts of their business to grow and generate better returns.
Exactly. Plus, remember their Houston refinery. Its location gives them options. They might repurpose it for something else entirely.
Like what?
Maybe something related to renewable energy or those advanced materials we talked about. Who knows?
Interesting. They're not just reacting, they're planning ahead.
Exactly. Now let's talk about something else that's crucial for their future. Research and development.
R&D, that's where the magic happens, right? New products, new technologies, what are they working on?
They're putting a lot of money into R&D, and they're focusing on areas that align with their sustainability goals.
Like what? Give me some examples.
They're trying to develop more sustainable plastics. They want to reduce their reliance on fossil fuels. They're even working on making their products more circular.
Circular.
Like designing products that can be recycled and reused, reducing waste. It's a whole new way of thinking about product life cycles.
Ah, got it.
Yeah.
So they're not just talking the talk on sustainability, they're putting their money where their mouth is.
Exactly. They're also investing in digital technologies, things like AI and machine learning.
Oh, that's the hot new thing, isn't it? Everyone's talking about AI. What are they using it for?
They want to use it to optimize their operations, make better decisions.
So they're embracing the digital transformation.
Oh, yeah. They're all in. They think it'll help them become more efficient, more adaptable, more responsive to changes in the market.
It's fascinating to see how all these pieces fit together. Sustainability, innovation, digital transformation. They're not just random initiatives, they're all connected.
They are. It shows that they're thinking long-term, adapting to the new realities of the global marketplace.
All right, we've covered a lot of ground. Finances, risks, strategy, sustainability. But there's one thing we haven't really touched on. Their people.
Ah, the human element. You're right. That's important too.
What can we learn from our sources about their workforce, their approach to, managing their human capital?
Well, remember that executive offer letter? The one that required executives to own company shares?
Yeah, that was pretty unique.
It turns out they extend that ownership mentality to all their employees through stock purchase plans.
Really? So everyone can be an owner?
In a way, yes. It encourages employees to think like long-term investors.
Interesting. It's like they're all in this together. Not just workers and bosses, but partners in the company's success.
Exactly. And they're big on diversity and inclusion, too.
It's good to hear. Why is that so important for them?
They recognize that having a diverse workforce brings different perspectives, different experiences, which leads to fewer decisions and more innovation.
So it's not just about being politically correct, it's about good business sense.
Exactly. They also emphasize employee training and development, giving their people the chance to learn new skills and advance their careers.
So they're investing in their people, just like they invest in new technologies or markets.
Exactly. They understand that their employees are their most valuable asset.
It's impressive how much we've been able to unpack about LyondellBasell. We've gone deep on their business, their financials, their future outlook.
It has been a pretty comprehensive deep dive. But before we wrap up, let's take a step back and summarize the key takeaways for our listener. What are the big things they should remember about LyondellBasell?
All right, let's distill it all down to the essentials. So we've gone through a ton of information about LyondellBasell Industries, financials, business segments, risk management, all that. What's the big takeaway for our listener?
It's about seeing the whole picture, right? We've pulled back the curtain on a major player in the chemical world.
We saw how they generate revenue, manage those risks, and what they're doing to stay ahead.
Right. We saw their strengths.
Yeah.
Like, they're not afraid to innovate, they're smart about hedging, and they're taking those environmental concerns seriously.
But we also dug into some of the potential problems.
Like those wild swings in commodity prices and all those regulations that keep changing.
But now, with all this info, our listeners got a much better grasp on where LyondellBasell might be headed.
It's like we've given them a special set of X-ray glasses. They can see right through the company's reports, understand those decisions, and figure out what it all means for their future.
And these aren't just one-time use glasses either.
Exactly. You can use these skills, this way of thinking, to analyze any company.
It's all about thinking critically, understanding the industry, and seeing how all those different parts of the business connect.
But before we go, I got to leave you with one last question to ponder.
Oh, I like where this is going. Hit me with it.
LyondellBasell's got those big sustainability goals, right? And everyone wants eco-friendly products these days. So how can they use what they know about advanced polymers and this circular economy thing to create a real advantage?
Wow, that's a good one. It's not just about the numbers anymore. It's about the big picture.
It's about understanding those long-term trends that are shaping the whole industry.
And figuring out where LyondellBasell fits into all of it.
It's not enough to just look at the balance sheet. You got to look beyond that. Imagine the future they're building.
Well said. That's about it for our deep dive into LyondellBasell.
Thanks for sticking with us. We hope you learned a thing or two.
And until next time, keep exploring, keep asking those tough questions, and keep diving deep.